Hi guys, I am back. We're going to get into the second hour. We're going to talk about everything that you guys have done. So I want you to see this. When I scroll through to see what you guys have done, let's see if I can make this happen real quick. This is how I see the chat box, and I've got to scroll all the way up to the top to click on your links. So, whoops, my charts weren't scaled. There we go. Gosh, look at that. Term to term to term to term. A lot of indecision in the NASDAQ today. Look at those split triggers. Whew. Crazy, isn't it? That's not very concise. Termination condition. Man, it's like all those lessons we talk about just keep happening live in real life. All right, guys, scrolling up to the top, we're going to take a look. George T, did you ever figure out your commissions? All right, here we go, guys. Let's get going. All right, Joel gets us going today, and I love it. Joel says, odds favorable momentum, the path is clear, no divergence. He has split triggers, but he only has one entry. So he takes the area inside of favorable large triggers. Ah, thank you, John. Excuse me. And it comes up, that divergence prints, and then there's those split triggers again. Price loves to pull back to those triggers, so that big gap that he notes may create problems. But he already had his reversal bar, he already had his first profits. Great job on that one, Joel. Strong trading, great chart read. And the next one, odds favorable. Everything says down, everything says down. Area at resistance inside of favorable large triggers. Joel, why were you jumpy on this one? Look at that checklist. Strong triggers, no terminations, perfect entry right at the area inside of favorable large triggers. All my new people, do me a favor, give me a Y in the room if you see it. Isn't this the perfect trade? Isn't this all three advantages? Momentum, clear path, beautiful entry. Joel, I'd take this trade 1,000 out of 1,000 times. And you know what? If I take it 100 times, 20 of them are probably going to lose. And guys, this is why using these rules is so important. Because when you can look at it and say, if you can look at it and say, I followed my rules, I gave myself the best chance for success, well then it pulls the sting out of a loser because you're like, man, everything said go, this one just didn't work. That's okay. It's a part of the process. And then for you NASDAQ users, termination creates odds favorable creates a clear path. Clear path, look at the split on the triggers. Price is likely to close the gap to the small triggers or to the large triggers. When it does, right there at the area inside, close on the correct side, giddy up down to Fibonacci support. I hit my daily goal on one trade this morning. That was kind of nice. And then Ron says, when everything is going fast and I have the best momentum look here, I'm going to take a chunk out and make just a little bit of money. Ron, what a great trade. And then PFI, that's your chopped out, right? This was our lesson on strong triggers or favorable large, best of the best entries. Was everybody here? I know, Joel, it does. It does sound good to hear it from somebody else. John Novak used to do that. I would take a trade, I would follow the rules when I started following the rules. And he's like, man, perfect trade, Mark. No worries. Good job. And guys, this is just the entry rules. When you take the best, everything tends to work out more often than it doesn't. And then Wells, I believe did we look at yours yet? Let's take a look. All right, so let's go through it. You're saying, I think this is an entry. I love these posts. And what this does for me, first of all, thank you for posting a picture because, guys, if you're a brand new user, I get it. It's scary to post a new picture. So Wells, are you with me? Let's go through this. Let's go through the process of following the rules. So first of all, what's the trend? The trend is up, right? I like that. And then let's go to the next rule. The next rule says that I need strong trigger lines. I need odds favorable momentum in order to feel comfortable with taking this trade to the long side. What odds favorable momentum means to me is that the smalls are up, the large are up, and there's separation between the two. Do you see it? This is the picture perfect advantage of momentum. So when we look at your chart, no, you weren't wrong. You were learning. The larger down and the smaller up, which means that we just don't have the agreement there. So I don't have odds favorable momentum yet, but that's okay. Let's keep going. The next thing is I have to have a clear path. I have to have a clear path to get to my target. Do you see how it already reached resistance and all of the trigger lines remain below? So when we talk about termination conditions, and guys, I'm going to take this and we're going to take everything back to the rules. Price reached the area of resistance. All of the trigger lines remain below. I know that this is a termination condition. This is an area that may reverse the market. Price reaches resistance. Trigger lines remain below. See how it stops the market? See how it starts to begin to create that bounce? Does that make sense? You think so? All right. So let's back it up a little bit. In this downtrend, do you see how the small are below the large? We have odds favorable momentum. Do you see how it hasn't reached blue Fibonacci support, yellow 1-to-1s, or a divergence low here? And look at this. With the downtrend, with momentum, it pulls right back to resistance. And because all the trigger lines remain below resistance, I got you loud and clear, Moon. This resistance is likely to stop the market. It's likely to stop the market because of the momentum, because of the direction, because of the trigger line location. That's your textbook, and that's staying with the momentum, staying with the trend. And somewhere over here, there may have been a potential entry. So it's a great picture, but if you get in the habit every time you look at your chart, and we'll do it live right now. I have a termination condition. I'm in a downtrend. My smalls are below the large are wide. Do we recognize this 50-50 look, guys? The smaller above the areas, or the larger above the areas, but the smaller below. And now they're working their way down. And the same is true here. I still have a 50-50 look. Smalls below the area, the larger above. I'm coming from a termination condition. If this reversal bar prints, I can put a limit order just below resistance inside of favorable large triggers. Right? I can even go right there because it's creeping down. But if divergence prints, well, then I have a loss of momentum and not a clear path. And for you brand new users, that might be a reason not to take a trade. But you see how I talk through it. I'm in a downtrend. Where am I coming from? I'm coming from a termination condition. This divergence right here, PFI, when price reaches this area, if the triggers don't break, it's a termination condition. If the small triggers break through with odds favorable momentum and the large do not, it's a 50-50. Does that make sense? The same way up here, see how the trigger lines never broke through that divergence high? We knew about that divergence high for 2 hours. It took 2 hours for crude oil to come back and retest that area, and when the triggers didn't go through, it started the push down. So when do you enter? If you get a reversal bar, we'll create a window of opportunity. The window of opportunity from the highest point of the triggers to the lowest point of the triggers, from the lowest point of resistance to the highest point of resistance. If no divergence prints, I have a limit order waiting for that market to come back to me. I'm literally already waiting. I never even got a reversal bar, PFI. And the more these triggers break through areas, the better I feel. But I've got 1 area, 2 areas, 3 areas that I'm waiting to break. See how my large triggers come down? And now resistance is enveloped inside of those large triggers. The only thing that I need to know is whether or not divergence is going to print, and I won't know that until about 71. So for me, if my rules say no divergence, I've got my finger over the X. So if divergence prints, I'm going to cancel the order. As you grow with the software, this good top might let you trade with 1 divergence. You'll take a lot of pictures, right? And you'll see it. So we'll see what happens here. It's either going to work or it's not. But, Wells, that's the process that I go through. Every time I take a trade, I literally talk myself through it just like that. What's the direction? Where am I coming from? Do I have momentum? Is the path clear? And if it is, I'm going to look for an entry. Did I come from a termination? Absolutely. Do I have odds favorable? 100%. Did I have no divergence, strong triggers, pull back to the area inside? Absolutely I did. Gary's showing perfect execution on a 50-50 trade. Gary, solid trade, man. Beautiful. Safia, termination, full reversal. It's a 50-50 with no divergence. You jumped the gun, pulling back to the mid-band. It worked out for you. All that momentum from a termination condition takes you right to the profit target. Beautiful trade. Oh my goodness, divergence printed, guys. Now I've got to cancel my order. I sure am glad I came back. Guys, John Novak is showing you what's possible when you learn to read your charts. And John Novak is a wonderful man that waited for the second hour. I'll talk about every one of his trades, but understand that it comes from his ability to read charts, that it comes from his ability to take the best of the best. Gary, there's more to it than that. We'll talk about it in a minute. Whose picture was this? This is E. So let's go through it. This is where you would have entered directly into the termination condition. You would have gotten out here. So Wells, here's your entry, right? And that's where you would have gotten out. Why would you have gotten out from the middle of nowhere? Because after the fact you saw that it turned? You're going to see why I'm doing this. What if, hypothetically, you waited for the pullback to support right there at those large triggers? It's actually the same entry. And then you let all that momentum carry you up to the next fib. This is an easier, this is a manageable risk. This is bigger profit targets. Does that make sense? Strong triggers, everything says up. There's your pullback to the area of support right there at those large triggers, right? That's rule number 3. So if you get in right here at 83.75, it's the exact same entry here. But now you let all the nonsense as it works through the fib work itself out. You let the trigger lines catch up. You give yourself that solid level of support to bounce off of. And then all of this momentum, they've already reacted to the fib and said, everything says they still want to go up. And then I'll use that momentum to carry me up to the next. That's also a good entry. That's a pullback right to that midband, right at those large triggers. And then this, where you want to enter, would be my first exit. This would be my first profit taking. And then my second profit taking would be somewhere around 92, 97. So rule 1 is in place. Odds favorable momentum. The smalls have made it through the area. And then rule number 3 creates a manageable trade. And you're just going to go through and you're going to study this. Yeah, no, you're doing awesome. Wells, you're posting pictures, and we're going to talk about all of them. And I want you to just be okay with the idea that I have to point out things that maybe you're not doing perfect on your third day. Most of us are type A. Most of us found a lot of success in whatever our chosen profession was, right? Most of you that are accountants are the best damn accountants at the firm, and most of you that are engineers are probably the strongest engineers in the firm. You guys that are teachers are the best teachers in the school. You guys that are doctors are the one that I want working on me. You're accustomed to that level of success. You're accustomed to being good at something. So now we just back it up, right? We back it up and you give yourself just a little bit of grace. It's cool to be new. It's great to make mistakes, right? We're on cadavers, not live bodies. We're building in AutoCAD. We're not building them in there. Absolutely you can. Yeah, crawl, walk, run. So you're right where you need to be. Wells, the momentum was great. The path was clearing. And then this becomes your best entry at the area of support inside of favorable large triggers. And that's going to be the next step. And once we get the 3 put together, that's when it all works out. That's when the magic happens. So it's repetition. It really is. And you're in the perfect spot. And I want you to realize that. You are exactly where you should be. Nobody ever got $1 million a year job from 4 days of study. It's just never happened. We all want to be good yesterday. Just takes a minute. Dab Chain, back in the house. Nice to see you. All right, let's look. You got lines everywhere. Let me figure out what your large chart is. Here's your 13.2, 45.26. So it's up here. You went long. You went short against momentum. Dab, are you with me in here? Momentum was up, triggers were up, direction was up, everything was above resistance. It's behaving as support, and you hoped that the red line would hold, right? That's all it was. You hoped it would hold, but you fought direction and momentum. Kicked your ass. That's okay. Great lesson there, right? No reason to take that trade when everything says up. Go with the trend. Go with the momentum. It makes it easy. And then everything turns, and you jump in at the top of the move without odds favorable momentum, and sure enough, it pulls right back to support inside of favorable large triggers, right where you had a stop waiting, and you said, oh no, I just exited a trade right where I should have entered, and then you take the right entry. So the goal is to get rid of this trade and embrace the idea that this is the one that's going to get you paid more often than it doesn't. Does that make sense? Do you have capture PFI? I'll pull mine up right now. We'll go through it. In the bottom right-hand corner of capture, take the picture, capture it. Right here, it says copy. And once you copy that, you can bring it over to the room and it'll paste it without the link. And those are perfect for the chat room. Those work great. And then if you want to get it up and get that link, that's where you click the upload button. If you're in the pop-out PFI, if you're not in the main room, so if you're in the pop-out version, you have to go Control V. It won't let you right-click and paste. Oh, if you want to paste the rules in your picture, first of all, I think that's a horrible idea because writing the rules are going to reinforce the rules. But if you really want to do that, you're going to have to spend $64 and then you can drag and paste right into it. But guys, I'm telling you, people that copy paste their rules phone it in. People that copy paste their rules break them all the freaking time and mark yes when rules aren't met. And I'm telling you, it's detrimental. If you're not writing, if Dab had written triggers up, direction up, areas up, everything up, if he had written that on the chart, he might not have gone short, right? I love writing on the charts, guys. Copy paste is great. When you're making money all the time and you're just creating this journal, maybe you want to share it with your cousin that's going to learn how to trade, that's awesome. John says it's nice when the NASDAQ runs. Trend trades, that second divergence, make a little tight in the middle, but he was able to get lucky after the small triggers rolled up again. The rest of your run are done from the day. So John says, perfect trade, right? Gets to the correct side of the small. Second divergence prints. It pushes down a little lower. So he takes the next entry. Everything says up. He's out at the trouble spot, up here at that divergence high. The market pulls back. Everything agrees. He gets in again and takes it to the fib. Man, nice trading, John. That's some heads up chart reading. And then Dab, everything says up. Trigger starting to merge. 21 says go. All right, Dab, can we talk about the 21? I shot you in the heart, Bobby. But it's true, isn't it? When you copy paste, it's easy to break your rules because all you have to do is check yes. And your brain goes, hell yeah, I followed the rules. And then you post it in class. I'm like, was that really odds favorable momentum? I know because I've done it. I'm telling you guys, there's no mistakes you could make that I haven't already made and had John Novak fix for me through feedback from looking at my trades. Dab, your 21 says 50-50. Your 21 says that this path isn't clear, right? So this chart says, it might break. This chart says we're at a termination condition. This chart says we have weak triggers at a termination condition on every chart with no clear path. The likelihood of weak triggers breaking through on a 50-50, it goes down, man. It goes down a lot. The same way that 13-2 leads the 5-1, your 21's got to lead. If I have a 50-50 here, it should be perfect here. If I have a 50-50 here, it should be perfect here. Does that make sense? Just a little way to keep you out of that indecision. This right here that kept John Novak on his toes is not having a clear path, right? Just waiting for it to be perfect, and then once it was perfect, giddy up. Down here, he takes it off of the termination condition, makes money, gets out, gets in, and then the market goes sideways. The market goes sideways at these key Fibonacci areas. The market goes sideways at these areas where the market reacts. That's where you get all this indecision, where the trigger lines don't agree and all that good stuff. And if you just let those areas sort themselves out, more often than not, everything's going to agree again, and it's going to give you an opportunity to get in and let the market do exactly what your large chart told you it was supposed to do. Here everything says up, here the path is clearing, here you're on the right side of everything, and giddy up. It keeps going. Right on. As long as you can recreate it, it's amazing, guys. I don't ever tell anyone that their winning trade is a bad trade, but I will talk about the potential disadvantages that are there. So maybe you can kind of work some problems out. Joel, odds favorable, the path is clear, no divergence, pull back to support, perfect entry, and then it gets to resistance. What a great exit. No reason to lose money on this trade, Joel. Divergence right from a fib. At this point, go break even, right? You're losing momentum here. You're losing momentum here. It's a beautiful trade, Joel. Very nicely done. Let's see where I'm at. Dun, 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 dun. Scrolling through. Craig, what's going on, Craig? Whew. Craig taking that momentum style. I like it. Everything says up, the path is clear, and you take a little chunk on the way up. Nope, you didn't. You fought everything and got run over. All right. Craig, are you with me in here? I love this picture. This is an awesome lesson. All right, we're going to go through it because, guys, I think that a $200 winner is awesome until you match it with a rules broken $200 loser. So, Craig, just for the sake of education, at this red fib where you went short, the triggers are up, right? Both small and large are up. The trend is up. The triggers are up. The trend is up. Everything on both charts says that the market's probably going up, right? And this is what new users do, and I don't want you to feel bad about having done it, is new users say, I'm going to take a short. I'm going to skip every long trade that has advantages right here, right? I'm not going to worry about going long with the trend, with the momentum, with everything. What I'm going to do is I'm going to be a badass, and I'm going to go short at a red line, and everybody's going to be amazed. And that's probably not what your head was saying, but that's what mine used to say. They're going to be so impressed when I call the top. And I have a picture. And this picture is called Might versus Has. And for all of you guys that want to counter trend trade, this is one of the greatest things in the world, I think. So when I think resistance will hold, and guys, this is a good lesson, especially for you new users that think you're going to be a counter trend trader. This price, this red fib that I hope holds, Craig, is the exact same price at where my small chart says that it's likely to hold. Right here, as price comes into it, my triggers are up, my momentum is up, everything is up, my trend is up. And if I get in right here, I get stopped out. And if I try it again when everything says up, I get stopped out. And if I try it again when there's indecision, I get stopped out. But if on my small chart, I let my small triggers get below the large triggers, if I let my large triggers roll, if my trend changes, and then I sell the pullback, it is the exact same price as where I hoped that that market would stop. Does that make sense, everybody? So Craig over here, where you hoped that 45.42 would hold, rather than jumping in at the red line, now your large triggers start to roll. Now a divergence prints. Now your smalls are below the large. And wasn't that 1,000 times easier to take you down to that Fibonacci support? I love it. So Craig, once again, all we have to do is eliminate that little bit of hope. From 37 to, I can't see what your exit is. I think it was 40. So that was 4 contracts. That was 8 points, right? 8 points out of the kitty. And over here, you made probably about 12 or 13. So you're net up, what, 4 or 5 points on 2 trades? Wouldn't it be awesome to be up net 13 per contract by eliminating the one that fights everything? And that's kind of what we do with these rules, guys, is we teach you to be just a little bit patient, to wait for those advantages, to make sure that they're in place so that you're not throwing away money hoping or wishing or anything like that. What you're doing is you're saying, my indicators say that now it's time to take a short. My indicators say that now it's time to get into the market. PFI, odds favorable, beautiful entry. Take your profits, right? Same thing as Joel. Odds favorable, everything says up, strong triggers, support inside of favorable large triggers. You are in, man, PFI, this is awesome. That's your best entry that I've seen out of you yet, I think. In at 83.90, it went up $170 worth of profit right to Fibonacci resistance. Can you imagine just taking 2 contracts off right there? You're up 340. Rather than giving it back and losing that trade? Isn't it amazing that you can identify where the market is likely to go? And even if you take 1 contract off at that trouble spot and go break even, you're still up 170 bucks on this trade. So PFI, what we're seeing right now is you're in the perfect spot. You're beginning to recognize momentum. You're trading with the trend. You're refining your entries, right? That's the first piece of the puzzle. The first piece of the puzzle is getting in at the absolutely best spot. The second piece of the puzzle is learning how to manage it. Recognizing areas where the market's likely to go. Got out when you did on the next one? All right, I'm going to go in order. So we'll come back and look at that one in just a second. But that's a great trade. It's just a management opportunity at that point, which is great because great entries create manageable, right? You had 3 ticks of risk on that trade. Beautiful. And then Rakesh, small and the large are wide. Everything says down. You entered below the large triggers and a stop loss just above the large triggers. So Rakesh, easy fix. Oh, you're doing great, man. You're doing great. Rakesh, are you with me? This picture is going to open the door for an awesome lesson, guys. When price accelerates away from the large triggers, so much so that there's room for a full bar to get back, This is what we call the gap theory, guys. And the gap theory says that when price pulls away from those large triggers, those synthetic triggers, fast and strong, and it hits a mid-band or fibs or anything, one-to-ones, it's likely to snap back to those triggers. It's likely to close that gap to those triggers. So Rakesh, when we look at your picture, you had odds favorable momentum, and you had a clear path to the bottom, but price accelerated away from those large triggers so stinking fast off of that termination condition that it had to correct itself a little bit, and it came back to those synthetics. And then if I look at your chart, you're not running synthetic triggers. If you were, you would have seen that they were all the way up here, and you might have just been a little patient staying out of that trade. And then if you're going to use these range charts, you had an antenna bar at a pivot stop out at support with a giant gap theory, and you'll begin to piece these things together. But this one, the only thing that you needed to recognize is that the large triggers were a full bar away, and it keeps you from taking a shot at that short as you wait for it to close the gap. I think it's a great read. It's a little nuance there that's going to make it a little bit easier as you grow with the software. Gap theory is a very real phenomenon, guys. It happens every day, all the time. And then Joel, gap theory, once again, right here. So here we go, Exhibit A. Price accelerates. It's a 50-50 trade. Large triggers stay a full bar away. That's the exact same trade. And Joel, your area is down here. So you had a mid-band, but the gap theory says don't go yet. Does that make sense? Can you guys still hear me? Awesome. Gap theory, guys. It won't get you into trades, but it'll keep you out of trades. Look in your picture. There it is again right there, isn't it? Price reaches a Fibonacci area. Large triggers don't follow. It closes the gap. I love it, guys. The gap theory happens all the time. Price accelerates down. Large triggers don't follow. Closes the gap. Price accelerates down. Large triggers don't follow. Closes the gap. Let's find another. Price accelerates far away. Large triggers don't follow. Closes the gap. Closes the gap. Oh my gosh, closes the gap over and over. So Rakesh, Joel, focus on that, looking at the relationship of the large triggers to price on your large chart. And if it's more than a full bar away, if it's above a reversal bar marker, sit on your hands for just a little bit. Let it close that gap. Great reads though. Both of you, they were great reads. One little thing keeps you out of that loser. Paul, little overrun. Market's going down, no divergence. You wait for the market flow signal. Everything is rolled. Quick profits, not willing to lose at this point. Paul, beautiful trade, awesome execution. PFI, we saw that one. Gave up 260 in profit and got stopped out. I'm glad that you put that on there. You put, oh my God, didn't see the divergence on the 5-1. Divergence had nothing to do with it, PFI. That red fib, smack. And then John, everything says down. Couple divergences. And he says small triggers are coming down too strong. You NASDAQ traders, take this picture, steal it. I put my new spreadsheet in there. My new spreadsheet has a NASDAQ section. I'm going to steal this picture and I'm going to put it in there. And I'm going to call it Don't Fight Smalls. If you're a NASDAQ trader, I would steal that picture. Don't fight strong small triggers on the NASDAQ. It's probably going to push higher, especially with divergences, and sure enough, it does. Way to avoid a loser, John Novak. Great patience. Looking for the next one. Had the same picture just a minute ago on the NASDAQ. Don't fight the small triggers. Closes the gap for the short. If you missed it, everything agrees. There it goes. You have to recognize how far away the triggers are. There's that gap theory. Nice picture, John. Way to jump in on the lesson there. Guys, steal pictures. PFI, you posted this one 3 times. I promise you I will get to all of your pictures. We will look at every one of them. Let me see where we're at here. I lost my space, my place in line. John Novak, taking a little more advanced. A lot of you guys ask me about edge trades. Abdulaziz, are you in here today? No. Did I, Safia? I'm sorry. Everything says down. John's using a large chart with odds, favorable momentum, and a clear path. And he's saying with this much momentum, this area is likely to hold. He lines it up on this chart, and then he waits for a close on the correct side on this chart and takes that biggest chart. It's a little more advanced, but it's still chart reading, isn't it? And let me show you how, as you grow with your ability to read charts, I'm going to make it smalls below the large, clear path. There's a tail, guys. The pattern's absolutely the same. He just took it up a level. If you want to, Safia, go right ahead. If you need more information to be successful, go right ahead. Absolutely. We saw this one. Am I missing another one, Safia? We talked about this one, the jump in on a 50-50, and it worked out wonderful for you. Great job trading with momentum and direction. The entry is a little unorthodox, but it works out wonderfully because of the direction and the clear path. That's the same one. Are you posting them in here or Traders Chat? And I apologize if I'm missing them. I'm not seeing them. Can you repost? And I apologize. Yes, thank you for that. I'm struggling. Was my message clear on the 55? I hope so. All right, Paul, let's see what you did. This was that crude oil trade. 50-50 on a divergence low. Divergence prints, you said you're going to wait for it at the top, or you're not going to take it at all. We'll see if there's an after picture there. I don't know what happened in the market after that, but I like it, having a clear plan. 9 years ago, we were doing the same thing. 9 years ago, we were selling pullbacks and downtrends. I like that picture, John. Paul says, this is a top if I've ever seen one. I love it. Termination, 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 full bar prints, no divergence, pull back to the mid band right at the small triggers with one-to-ones. For those of you that are curious about momentum trades, steal this picture. Paul's execution is 100% spot on, perfect, every advantage he could possibly have to take a momentum trade. Beautiful trade, Paul. And then there's that same one, divergence low, but now there's two divergences. And the top of your window is up here, right? And then Safia, here's another one of yours. Not a double PSO. I don't know what a double PSO is, Safia. This is just a higher divergence, right? That's all it is. Your large triggers are still below all the areas. Price is traded. No. So what's a pivot stop out? Let's go back to the rules real quick. No, don't be sorry. Guys, it's a learning. Everything is learning. Don't ever be sorry if you're not 100% solid on something. If I say that's not a pivot stop out, it's not because I'm mad at you for it. It's because I want you to be able to recognize it next time. This is a pivot with divergence, right? This on its own is not a termination condition, guys. This is a loss of momentum. That's all it is. This line doesn't even print until up here. The recipe for a termination condition, the recipe for a pivot stop out, means that price comes back to that divergence low. The trigger lines remain above. It may exceed it just a little bit and then pass above. This is your pivot. Everybody decides to go long from the loss of momentum. The sellers push back, stop all the buyers out, and then it continues in the direction of the trend. So Safia, what you have is a pivot with a loss of momentum. It's not a strong bottom. And then when you take that pivot, it's great. The small triggers are up. I like it. The large triggers are still down. They're starting to roll. You can see that they're not up yet over here. You get no divergence. And with all that momentum, you take an entry, right? But you're taking an entry directly into resistance that hasn't held. So you're putting a lot of faith in these small trigger lines to push you through the area. And it does work out for you. Absolutely. So the only thing that I want to talk about is that it's not a pivot stop out, just a recognition thing. And it's not really a 50-50 trend trade because you don't have odds favorable momentum yet, but you do have momentum on both charts. You're taking a momentum style trade, not coming from a termination condition, and directly into a termination condition. Does that make sense? Cool. And you said that the area cleared. And you're talking about this one right here, right? But the only clear area to the top is this support all the way down here. Your large triggers are still below down here. Your small triggers have broken it. So if you're 50-50, it's on that 25 area, and it pulls back right to it. Yeah. You meant the fib. But there's three, right? So the only area that's cleared is this one. This is the only Fibonacci area with both the small and the large above it, right? Are you comfortable with that idea? This one has the potential to break, but it hasn't broken yet. That's why you wrote 50-50. So you can't write 50-50 and no term. Oh, how could that be? Does that make sense? I can't have a 50-50 and say that there's no termination. We'll use the push down, right? What I have is a 50-50 because this could potentially be a termination condition. Great picture, Safia. And I think that it's awesome to post pictures like this every now and then because it really does help with just associating the looks with the words that go with them. That's a beautiful termination condition. That's odds favorable momentum. That's a pullback right to it. Safia, that's how you do it. This is the one that you never miss. See the difference though? Because of this termination condition, it's more likely to work, right? Because of these strong triggers, it's more likely to work. Because of the large down, that's the one. That's how you take that trade from a great termination condition. Beautiful. Perfect. Makes me happy. Right now, John Novak's looking in. He's like, hell yeah, Safia. 50-50. Oh, we're going this way, 50-50. Smalls below. Alan, were you here for the conversation on this one earlier? So I like this picture a lot. I really do, because I feel like you were chock full of advantages, right? 50-50, strong triggers, mid-band held. Man, this is a great look. And Alan, this is the same talk we had with PFI and Paul, is this was your 50-50 entry with no divergence, right? That was the one. You already in, you already have your risk established. That was the divergence that killed it. Make sense? Yeah, if you had taken the first entry, your profits, your break even because of the divergence, you're just waiting a little bit. Creates a little patience. And I love, guys, you notice that all of you took this trade? Like a lot of you took this exact same trade. The only difference that I noticed in class is that one of you got in on the first entry and made money. Everyone else took the divergence entry and lost a little bit. And that's okay because it's a great learning. Great learning. Nice trade. And then Safia, I think we saw this one. We just didn't get to it yet. You thought I ignored you. We just hadn't gotten to you in the lineup yet. And then this is Paul. Paul says unfinished business. What does that mean? Paul says that when I get a pivot that doesn't come from a fib, when it's not a termination condition, when it's a bad bottom, not a strong bottom, that midband becomes the first target, right? And look at this, guys. When it reaches the midband, the large triggers are a full bar away. And what Paul is doing is Paul is taking this pattern that we recognize. Remember I said patterns are going to get you where you want to be? Studying patterns over and over. When this bad bottom comes up, and notice how none of my trigger lines get above this area, large triggers don't follow. Paul says very often the market's going to finish the move to that key Fibonacci area. Those sellers aren't done. The buyers just tested the waters a little bit. So what Paul did is he goes, with that in mind, if every indicator on my small chart agrees, I'm going to take a shot at finishing the move down to the bottom. Paul, this is a brilliant trade. Once again, I feel like I'm saying that a lot. Great trades. When this trade doesn't work, it doesn't mean that it's all over. It just means that you have to be patient, wait for everything to agree again, and chart reading takes you down to the next area. That's solid. For those of you that are new, Paul started in the same place you did. The exact same place you did. Termination, full roll, everything says down. And I like this trade, Alan, a lot because you get in, you take a shot, your stop's in place, right? Quick profits into the trouble area. And then look how it closes the gap up to the large triggers. There's that gap theory once again. Once this divergence prints, the 50-50 doesn't work, the gap theory is true, and then maybe you can look for another entry when that gap is closed. Alan, great trading on this one. That's as well as you could do it without the divergence, with all that momentum. Remember when I said that odds favorable momentum will cover mistakes? That's a great example. Beautiful job. George T. George T's been with us for a while. George, you broke your rules. Let me zoom in on this. Right into the mid band from a bad bottom. There's your large chart. And you take the short from a bad bottom, triggers roll. You take it right at the pivot stop out into support, and it works out for you. I don't know, Ziba, you would have to ask Paul. It looks like he got in. George, the momentum from the bad bottom carried you right to the profit targets. I think that, yeah, you did break rules a little bit, but I think you managed it well. You didn't get greedy. Ziba, it would appear that Paul took a pullback to the resistance anticipated to hold right at the large triggers rolling because there's no divergence so that he could capitalize on the rest of the move. That's what it looks like. If he had a different mindset, he can talk to you about it. Deb, it's probably just not updating. This happened before on people. It's just not updating yet. It hasn't caught up. We had that once and people closed it out, and when they opened it back up, it corrected. But that would be a great rhythmic question, I think. And then Paul, good top, strong triggers. That was your entry. And then you take the momentum style, and it just, at that point, you're frazzled because you missed it. That's okay. It's a great read. And then Ron says, here, Paul, that's how you should have done it. Nice trade, Ron. I love this trade. I don't take it. My brain doesn't wrap around it. And then there's your termination condition. Who was this? This is Gary. Termination condition. And then we're still in a termination condition, right? And the small triggers are against you, but there's no divergence. So you're just saying on the retest of the large triggers, I'll look for a close on the correct side. It's a great read. And then I think it was Craig, right? Craig, hoping the area holds, letting the trigger lines tell you that the area has a better chance of holding. Nice job, Gary. Termination creates a full reversal, gives odds favorable, tiny little window of opportunity, rock star entry, tiny little window of opportunity, virtually no risk even before the reversal bar. Paul, great job. Dab, you went way outside of my scope of understanding anything. I don't know anything about programming. I don't know anything about bots. I don't know anything about AI. You're welcome. Pick John Novak's brain. He loves that stuff. I read indicators. That's really all I'm good at. Ziba, I'm not sure what that is. Okay, if that's not your question, let me know what your question. His order has sell stop in the same place. That means he used a stop order to get in. That means that instead of having a limit order on the way down, he had a stop order, buy stop 2. If the market goes up and hits it, he'll enter the market. Wells, take care. Thanks for being here. I just did it. Limit orders happen when price comes down. Stop orders happen when you're waiting for the market to continue up in the direction. So if price comes up to 83.85, it will put me into a long position. It puts me in a long position. A stop order is like a limit order above the price for longs. All right, Joel. Terminations, 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 but there was an opportunity perfect trend trade to get you to the termination. And Mike M, how's it going? 50-50, no divergence, perfect entry, money, money at the problem. Is this NASDAQ? So Mike, you said you've noticed when triggers in the opposite direction, price pulls down further, right? Dude, this is what I've been studying for a while. And I've actually I've started pictures in the NASDAQ. When the smalls are down, just be patient, right? Don't fight them. Um, Gap close, triggers are up, close on the right side. That was an easy winner today. If I had been able to move my targets, I would have made more money, but it happened so fast I couldn't. Recognizing the divergences, the triggers up, and then just waiting for that deeper spot. Yeah, I think that you nailed it with that picture. Just be patient, right? Those are down strong. There's no reason to get in yet. Let it come back. Let that momentum die and then go. Gap, back to the large trigger, Ziba. Price reaches the mid band, exceeds it a little bit. The large triggers are a full bar away. There's my gap. Kept me from going short here or here or here. I let it close the gap, and then I look for an opportunity. Notice I didn't go long to get to the triggers. I sat on my hands and I waited for that gap to close, and then it's good. Rakesh, what is your ATM strategy on NASDAQ? NASDAQ moves fast. If you're not comfortable with what you're doing, it's going to slaughter you. My stops are 24. I put in 24 and then I move it to where the market shouldn't go, and 24 ticks typically gives me a little bit of room. No, it's not the space between the large and the small. All right, Ziba, let's go to termination conditions and let's talk about them. I love it. Great lessons. But what is it, Rakesh? NinjaTrader 8, John Novak gave you about 15 scenarios for management, right? Which one are you using? If you're only using a 12 tick stop on the NASDAQ, it's going to kill you every time, or most every time. 24, guys, 12 ticks, 20 ticks, 100 ticks, that's not your stop. Your stop is where the market shouldn't go. Your stop is outside of that window of opportunity. That's why we have larger tick stops initially, so that there's reaction time. It doesn't mean that it's going to stay at 24. It may go to 27. It may drop all the way down to 6. But the idea is let your stop be appropriate for the market that you're trading. If the NASDAQ moves so fast that I need 20 ticks cushion to be able to react and put my stop in the right spot, that's exactly what I'm going to do. So Rakesh, you may be using one that's perfect for the S&P, but trying to use it on the NASDAQ, and then that creates a challenge. So I know most of our NASDAQ users are beginning with a 24 tick stop. And I know that that option is in NinjaTrader 8 from the workspaces. So that's what I use. And it just makes life easier on me. It gives me time to react. It gives me time to put the stop in the correct spot. All right, Safia. I'm sorry, Ziba. Price reaches the midband. Do you see it? Let's make it super clear. Two contracts, 24 tick stop, 60 tick target. All right, Ziba. Price accelerates. Vroom, 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 vroom. I'm going to make noises because I love it. All the way down to this midband, right? So I'm looking at the bottom of that bar. Price made it all the way down. My large triggers are a full bar away. My large triggers are above that reversal bar. There is room for my large triggers to or for my price bar to create a full reversal all the way back to those large triggers, a full bar. This is the gap theory. This means that it's likely to close the gap to the large triggers, that the price is likely to snap back and reach those large triggers. Price trades into Fibonacci resistance. The large triggers remain a full bar away. See how the reversal bar is here and the triggers are below it? There's room from the top of the bar to create a full bar before it hits those triggers. That's the gap theory, ladies and gentlemen. That's the theory that keeps you from going long before it closes the gap. That's the theory that keeps you from going long before it closes the gap. That's the theory that keeps you from taking this short before it closes the gap. Does that make sense? And when price accelerates away from those large triggers, sit on your hands. Every now and then it won't close the gap, but more often than not, it does. And when it does, the average user is going to get run over. So, Ziba, termination condition, right? Beautiful. But it accelerates away from those large triggers. Large triggers don't follow. Look how it closes the gap, and then it goes in the direction of the trade. Price accelerates away from the large triggers. It looks like a 50-50, but look at the gap back to the large triggers. Closes the gap. Let's see if we can find another one. Oh, there it is again. Right into Fibonacci support. Large triggers, full bar away. Kablooey, it closes the gap. This is just one of those patterns that if you take a little time to study it, it's going to keep you out of a lot of problems. I mean a lot of problems, guys. We've seen 2 or 3 trades today posted in the room that didn't pay attention to that gap theory. They got run over. Really, PFI? This is what we're going to do today, right? You're going to wait for a termination to create a full reversal to give you odds favorable momentum, and you're going to take the perfect entry at support inside of favorable large triggers? And it wasn't a 50-50, was it? That's okay. Ziba, it's okay. That's why we ask questions, right? I'm telling you guys, you're going to hear the same darn thing over and over and over, and one day it's going to click and stick. One day you're going to be like, oh my goodness. All right, PFI, I'm not going to let you say you screwed up. No, stop. You don't get to say you screwed up. You get to say, I'm learning, Mark. I'm learning. And Mark, look at how far I've come in 2 days. Odds favorable momentum. Absolutely no termination conditions. Best entry anybody could ever hope for. The only difference is that you confused 50-50 with high probability, right? We had a clear path, which means you hold this bad boy to resistance. But PFI, is it just me? Or were you screwing that up yesterday, and maybe even as early as this morning? Were you fudging your entries before today? Damn right you were. You know what you showed me in your last two trades? Absolutely perfect entries. Absolutely picture perfect, exactly as John intended them entries. Which means that we're going to work on a little management. Great job, dude. Guys, screwed up is horrible. Don't talk to yourself any way that I wouldn't talk. You didn't screw up. You can't screw up in an educational process. PFI, if that said PFI's account, my real money, my kid's college tuition, well, then you screwed up because you're in an education process. That's the only time I'll let you guys say it. You're learning and you're doing a great job and you're progressing. In a matter of days, your entries have gone from iffy to heck yeah, right? You're learning how to get rid of the iffy trades. And now eventually you're going to learn how to manage these rock star trades. I think it's a great trade. I think it's an awesome education. And I think you're right on the path. And then Gary Rakesh, Gary showing his NASDAQ picture there. Thank you for that, Gary. And then Mike M. Just starting Apex. Do I have to use my leader account on my ATM? Just took an $800 trade, but it didn't work on Apex accounts. Have multiple accounts, wondering which one to use in the ATM. Mike M., you're going to hate this answer. I have no idea. Because I don't use multiple accounts. But just from looking at it, if the account here should match the account here, right? So if you're taking a trade on simulator here, my guess would be that sim needs to be your leader account. And if you want this Apex to be your leader account, then you probably need to drop it over here. Does that make sense? Is that right? Craig says yes. Okay, that's my guess. But I'm not 100% sure because I don't use multiple accounts. It's just not my thing. All right, Luciano showing off a little bit. Price reaches support, termination condition. Ziba, there it is. Price accelerates away from the large triggers and snaps right back to them. Still no long trade. Still too soon for a short trade. But Luciano says, hey, everything says down. The smalls are below the large are below support. I'll be darned, there's a pullback to resistance right there at those favorable large triggers. And off it goes. Beautiful trade, Luciano. And then this is one of those things on the NASDAQ. As you come up, Ziva, stop. You're just learning. Beat yourself up. Tell yourself you're stupid. Tell yourself you're no good. You're going to believe yourself eventually. Do it. Why? Because you're learning? Ziva, how long did you go to school for real estate? You didn't go? Did you go to school for anything ever? Okay. So Ziba, before you read the books, before you studied, before you knew what the hell you were talking about, did you go sell real estate? Or did the real estate licensing board say, Ziba, no, you have to learn these lessons first and prove that you're comfortable with them before we allow you to go sell stuff? Right? Ziba, you're in school right now. I do believe it. Because you didn't burden yourself with trying to sell shit while you were still learning how to, right? Pardon my French. So why are you giving yourself the burden of being at the end of the road while you're still on it? Why are you talking down to yourself? I like that, Cam. It's a trade apprenticeship. Guys, when I teach people to tattoo in a shop, they're learning for 6 months to a year. 6 months to a year before we ever even consider letting them touch real people. Luciano, this is beautiful. Odds favorable, clear path, pullback. Giddy up. Easy money. Luciano says it took 2 months to figure out the entries. Luciano, you're 5 months ahead of me because I spent 3 months doing what Z was doing, trying to get to the end, trying to get to the field goal, trying to get to the end zone, whatever you want to say it, to the finish line, before I really understood the concepts that were going to get me there. And I spun my wheels and was frustrated every day, and I almost quit trading about 10 times. Rakesh, smalls above the large are wide, they're angled in the direction of the trend. Rakesh, you don't appear to be running synthetics on your charts. Are you not carrying your 5-1 over? Because one of the things, guys, the way that Nexgen has designed your workspaces, one of the ways that Nexgen has designed the workspaces is, dun, 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 let me find my picture real quick, is on your 13.2 chart. All of the lines that extend to the edge are native to the 13.2. On the 13.2. The skinny lines that don't extend, these are 5-1 areas. These fat lines that don't extend, these are 21.3 areas. So Rakesh, what we have is this 83.76 line should have been right here, which lets you know that this was a 50-50 trade. Oh my gosh, Joel, I screwed it up every way that I could have possibly, and I lost a lot of money. At least you guys have Apex now. I didn't have Apex. I just totally pooped the bed with my real live money. So Rakesh, try something for me real quick on your chart. Right click. No, it is what it is. It's a tuition. I paid 15 grand to go to a mechanic school, guys, to go to a trade school. And that was a year long. Think about it. Stop rushing it. Be a student. Rakesh, right click on your chart and go to templates and then hit load and make sure that you have that 13.2 Renko 2023 and click OK. And what it's going to do is it's going to recalculate your charts, but that should put your synthetics on there, and it's going to help you a lot with those 50-50 trades. And then George T. I'm just going to do 13.251. 50-50, right? Bad bottom comes all the way up to the mid-band, all the way up to this divergence high. Divergence prints on the 50-50. So George says, I'm not going to try to go long, especially from a bad bottom. So what he does is he says when this termination condition holds, when these triggers roll, when there's no divergence and a pullback to the area, I'm going to take a momentum style winner. Absolutely beautiful, George T. I know, 4 years for a college degree, right? 6 if you want your master's. How long's medical school? 8, 10, something like that? And Rakesh, yes, 13.2 dynamic Renko bar. 12 years. 12 years before they call you doctor. And people in this room want to be professional day traders inside of 6 months. That's amazing. Bobby T, everything says down, lots of momentum, clear path, giddy up, get out, dig it. Taking advantage of the momentum. Nice job, Bobby. And over 150,000? Hey, PFI, great job today. Great job keeping it on demo. And guys, I'm telling you, every one of you is going to get to where you want to be. Stop trying to shortcut it. Stop trying to know everything. Build a foundation, learn the basics, post a lot of pictures, ask a lot of questions. I'll answer the same question 1,000,000 times. I promise I will. And it looks exact. Oh, You're on NinjaTrader 8, aren't you, Rakesh? I'm so sorry. I gave you 7. All right, so on NinjaTrader 8, let me see if I can find it in the user guide real quick. On NinjaTrader 8, what you're going to do, um, nope, that's indicators. Can somebody give me a picture on NinjaTrader 8 real quick? When you right click, I don't have my NinjaTrader 8 open. When you right click on the chart, Rakesh, there's a box that says tick data. Click on that box and that'll give you your synthetics. I'm sorry, I gave you the rules for 7 data series. I gave you the rules for 7. Thanks, guys. Here come the troops to help me out. I appreciate it. I guess I could open up my NinjaTrader 8 real quick too, so I can give you a visual. Got it comfortable. And then Zeba, Paul just invited you to ask him about his entries. Everything says down 50-50 from a good top. Perfect entry. And off he goes to the races. Hey, Ron, enjoy those chili dogs. I miss chili dogs. All right, I'm going to pull up a chart real quick for you, Rakesh. So I'm building the chart. And then Rakesh, right here where it says tick replay, here, let me build it without tick replay first. So I click OK. And up comes my chart. And I built a crude oil chart. And it's going to run through all those calculations. Right? And it looks a lot like yours, doesn't it? As it's calculating. All right, so there is my 13.2 chart without tick replay. And if I right click Rakesh, and right here under data series where it says tick replay, if I click it and I apply it, it's going to recalculate for me. And when it does that, what it's going to do is it's going to pull areas from my other charts. You start to see these other fib lines coming through. It's still calculating because now it's doing a little more. There's my native line. That's the one that's from my 13.2 chart. And now you can see that it creates these synthetic time frames, Rakesh. So the trade that you took without those synthetics was beautiful. It was perfect. It was amazing. But with that tick data enabled, it lets you know when trouble might be in the way. And this is one of the reasons that Nexgen puts those synthetics on your highest time frame so that you can recognize it. And it's going to keep you out of a lot of trouble. So if you need help with that, let me know. You can always go to Jason too. But that'll fix a lot of stuff for you. And then George T posted, oh my gosh, guys, it's noon. How did that happen? George, it's not coming through for me. I'm going to click on Bobby's real quick. Oh, and Bobby's helping out right there. There's that same picture in the room for you, Rakesh. Hopefully that helps out a little bit. George, yours doesn't want to show up for me. It did go fast today. A lot of great lessons today. A lot of great lessons today. And guys, this is how we're going to end. These aren't rules. George, if you want to repost it, I want to see it for sure. I love looking at your trades. Okay, Bobby got it? Awesome. Guys, I'm going to share this with you. These aren't rules. These aren't gospel truths. These aren't anything other than me searching the internet and trying to find messages that were consistent on whether or not you're becoming a maturing as a trader, whether you're starting to get comfortable. And the first one is managing risk, guys. Making sure that you're following the rules, that you're taking trades that fit a plan, and that that plan has been proven through study to win more than it loses. And then you start getting the most out of it, right? Manage your risk by having a proven plan, the same one that we teach. And then when you're good with that, you'll start learning how to get the most out of it. Being completely relaxed getting into trades because you trust the plan that you're trading, not forcing, not chasing, not using it for adrenaline, following that plan. And guys, this is why I give you hell when you start down talking yourself. Your worth as a trader and your worth as a person are not the same thing. Some of the most wonderful people in the world are the worst traders because they're learning, and that's okay. They're still wonderful people. You're still wonderful people. You're just learning something new. Your parents would never yell at you coming home from kindergarten, "Oh, you're so stupid you ate paste. You're such a dummy you can't do algebra," right? They would say, "Hey, good job at nap time, kiddo. That's right where you should be. And next year, you're going to start learning math. And after that, you're going to spell." Stop rushing it, guys. Enjoy the journey because this is the journey to $1 million a year job. And you can't rush something like that. So that's it for me. That's my preachy little love yourself a little bit thing. I am a hippie. It happens. I'm going to see you guys tomorrow morning at 9 a.m. And at 9 a.m., we're going to do it again. And you're going to ask all the questions, and I'm going to give you all the answers. And if I don't have them, I'm going to find them. And we're going to repeat this process every day until you guys are so sick of me that you fire me because you're making money consistently. And if you're not making money consistently already, guys, simplify your damn plan. Please. This should be recorded. It should be on YouTube, guys. I will see you tomorrow morning. You guys be good. Go follow some rules.